Welcome traders to this Elliott Wave Street weekly report. I'm Juan Maldonado and we're going to check today the euro, the S&P and oil from the Elliott Wave perspective, price action, profile, volume profile and institutional cycles. So let's start. All right, here we have the euro, which has been moving higher this week. Last week, we have the plan of the bullish move after seeing the reaccumulation from the big guy. Let's have a look at this low here, this low here, and this low here, and actually this last one as well. We have several bounces from a low node volume area. We know that in the Forex market, we don't have access to the real volume because it's not a centralized market, but the volume profile actually brings the volume by showing the areas where the price has spent more time. So, of course, this gives us a great edge in these markets where we don't have a centralized book to see the actual volume. It's a great tool for these markets and actually for any market. So this is a discount because the fair price is right here. It's called the point of control. It's at the 109.12. And these are discounts. The only thing we can do here is buying. Of course, we need to combine these setups with a price action entry or something else because the volume profile itself is not going to provide signals. It's just going to tell that the market is cheap and that these are buying areas. Now, this trade worked fantastic. This trading setup worked fantastic. The minimum target is the 110.10, the previous high, and we are almost there. But now let's talk about the future. Let's talk about how to trade the next cycle. Imagine all the stops that we have here. The buy stops, the stop losses as well from sellers that went short and they have their stops here. Sellers that also try to sell somewhere here and are leaving the stops. So those sellers are going to become buyers. So we have a lot of bullish liquidity here, let's say, from the retail market. Those stops, those market orders of those traders that like to buy the breakup, a lot of liquidity here. But what if the price comes here and rejects? So if that's the case, the limit orders, the liquidity of the market, will be more powerful than the other type of orders, and right there we can sell it. So in simple terms, this is going to be an extremely easy setup, traders. Once the price moves above this high and rejects, means a candle closing under this area, that's the sell trade. That simple. So again, price moving above this area, rejecting, and that's the sell trade. Easy, right? Extremely easy the way to follow this type of setups. We just need to have the price coming into this area, and then once it rejects, closing below the area again, we can sell it. The target is going to be this area again. So because we are far from the point of control, this makes the market expensive, and at this area, we could very easily find the sell trade. That's the setup for this week. Let's have a look at the S&P. On the S&P, the previous week, we were looking for the buy trade at the completion of this corrective leg. You can check the video because there is the process and the target, the previous high. Once we get to the previous high, I was expecting last week a fresh high, but the price couldn't continue, it was already expensive, and it started a deeper corrective wave. Now, this week, we already have a rejection. Actually, this could be the end of the cycle. So we have to get ready in case that we have an impulse, like a 1, 2, 3, 4, 5 sequence at the corrective wave. We will need to jump into the trade. That will be one way of triggering the bullish setup, or better, but here we are dreaming a little, but let's see if it happens. if the price moves down here before and then rejects this area here, that will be a fantastic and easy way of buying the S&P. I don't want to short the S&P. I know that the yields are flying and that this is not good for the market and that we're having the CPI report this Wednesday. And of course, if inflation comes higher than expected, the S&P could crash and could move strongly downward. But I think that inflation is gonna be fine, and probably the bond market is gonna start adjusting again, moving down the yields. So that's going to be key for this week. Of course, we have that risk, but as traders, we need to look for risk. We need to look for good setups. So if we have one of these signals, anyway, we are going to use a stop loss of 1% or less of the account, but we have potential to probably move back into the high and break up the high. So it's a key week in the markets. I'm going to continue with the bullish bias after this corrective leg. And finally, oil also is getting to the target. Last week, the plan was bullish. We were looking for the move up on oil with a target above this previous high on the CL. And we are getting there soon. Price is going to hit the high. And at that area, I'm looking for the sell trade. So once we get here to this area, I want to sell it. I want to sell the oil. And the minimum target is going to be the previous low down here back to the 63 area, probably lower because I'm looking for a big wave 3 down. I believe oil should be trading at the 50 or 40 by the end of the year. We will see. But for now, we can focus on this rejection. Traders, if you like this analysis, please visit us on elliottwavestreet.com. You will find in the membership tab the membership plans that we offer. We have a special offer of $19 the first month, so you can trial the service for just $19. We have the Forex, the stocks, and the full access. Also, you will get access to the Monday through Friday video where I explain the setups on each of these instruments. And also you will get access to the education library, a great library with a lot of courses where you can learn a lot about Elliott Wave, how to validate at the end of the waves, institutional cycles, and more. So please have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.